This is all about Bitcoin, a show dedicated to all things questions and markets related. Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. Bitcoin is rebounding from yesterday's pullback, trading at 60,100 and change. Bitcoin is up about 2.4% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So let's take a look at some of our top stories. Who bought the dip on Wednesday? El Salvador, of course. President Nayib Bukele tweeting that the government of El Salvador bought 420 more Bitcoin, or about $25 million worth. El Salvador's treasury now holds an estimated 1120 Bitcoins, according to Reuters. Heading over to India, where the Indian government is likely to regulate cryptocurrencies in its upcoming budget in February, moving away from its earlier approach of seeking to impose an outright ban, according to a Business Today report. A law covering cryptocurrencies will most likely be discussed in the country's next general budget, the report said, citing Indian Finance Ministry officials. In June, the New Indian Express reported that the government was leaning towards classifying Bitcoin as an asset class and that the Securities and Exchange Board of India would regulate the cryptocurrency sector. Finally, a global anti-money laundering agency, the Financial Action Task Force, or FATF, releasing an updated guidance for firms that handle cryptocurrency and virtual assets. It appears designed to corral much of the nascent industry into the existing regulatory framework for banks, signaling that regulation is coming for crypto firms, both centralized and decentralized, and that countries should implement these standards now. Joining us now to discuss is Ben McMillan, Chief Investment Officer at IDX Digital Assets, a quantitative asset manager. Hi there, Ben. So, did you buy the dip?
We didn't. We actually, again, our focus as a firm is one of managing risk, and especially, your points earlier about kind of the continued adoption we've seen of Bitcoin with, El Salvador, India coming online. Wharton today announced that they're going to start accepting tuition in Bitcoin. This is all part of a very long-term bullish case for Bitcoin. But interestingly, what we've seen is now the clients that we talk to are now more concerned about the risks with the asset class. The conversation is no longer about whether or not it should be in the portfolio. Most people are past that. It's all right. We know it has a place in the portfolio, but now how do we manage it? Because the volatility is very real, and so our models are designed to mitigate short-term volatility. And so we actually ended up taking a little exposure off the table earlier this week, right at around $62,000.
Right. So maybe you can go into how do you manage the risk? I mean, it's good times right now, but if you're in a crypto winter that lasts, 1 or 2 years, it's not so great on the bank account.
No, that's absolutely it. I mean, and that's, it's funny too, because, a lot of the early clients we had, the early conversations were early adopters. And so for them, it was just about buy and hold for 10 years, lock it away in a ledger. Crypto winter isn't an issue. But, as we start seeing more institutional investors, and as most of our clients are fiduciaries, these are groups like pensions, endowments, they're managing other people's money. So they're marking to market every month. They simply just can't tolerate a 90% drawdown, a 3-year drawdown. That just makes Bitcoin as a buy and hold proposition just simply untenable. And so the conversation very starts to pivot to how do we manage this? And so to answer your question, we're a quantitative firm. We're looking at the big data all day long, every day long. We have models running. And so we're looking for things like conviction around a move. What's the on-chain data saying? What's the sentiment saying? And simply stated, we think about the world and we look to separate the world into kind of 3 different areas. Green light, yellow light, red light. So risk on, you want full exposure. Red light, you want maximum cash. And then yellow light, which is where we are now, which is where you're cautiously optimistic. And so again, that's why earlier this week, we started to pare back exposure. We're still long, we still have a bullish outlook, but we're taking more of a wait and see approach to see where does Bitcoin go from here? Is it going to be like a few weeks ago where it hit all-time highs? Or is it going to be like April, May, where we saw a 50% drawdown?
What makes you cautiously optimistic and in that yellow zone, as you say?
So it's a good question. It's a combination of the secular bull case is still absolutely intact. One thing you've talked a lot about, which candidly I don't think has gotten a lot of press, is the success of the Lightning upgrade. We have Taproot coming online. We're starting to see a real critical mass of adoption of Bitcoin, not just as a store of value or even as an inflation hedge, candidly, but, real use cases. MasterCard, El Salvador, Wharton, people are starting to really transact in Bitcoin. And so, all of that obviously presents a very strong secular bull case for Bitcoin. But of course, at the end of the day, it's buyers and sellers, and it's a sentiment-driven market. And so, really, it's the shorter-term indicators that are determining when we take risk off in periods.
Well, Ben,
like this.
Since you're in that yellow zone, what are some of the more, the risks to watch out for that could potentially lead us into more bearish territory that and would make you more cautious?
Yeah, so for us to move into similar to what we saw in April, like a full cash position, it would just be selling pressure. So this year has really been the story about China. Fortunately, a lot of the risk with China has subsided, but any kind of large scale liquidations, we're seeing leverage tick up a little bit, which I think is contributing to some of the short term pullback. But excessive leverage in the system and short term liquidations are typically a catalyst for downside volatility. And I would say that's the big near term one that we're kind of keeping an eye on.
All right. So end of year outlook, Ben? Any price targets?
End of year outlook is still strong, but again, we had a client tell me this is, Bitcoin started the year at 29,000. We hit all time highs, which looks great if you ignore, the 25% drawdown in Q1, the 50% drawdown over the summer, and then another 30% drawdown or 36% drawdown just a few months ago. So the outlook is volatility is here to stay. We would not be surprised to see all time highs again, but we certainly would not be surprised to see another big drawdown. So volatility is the one constant in this asset class.
All right. And it's a difficult thing to navigate. Thank you, Ben, for joining us. That was IDX Digital Assets CIO Ben McMillan. Coming up, Bitcoin is being accumulated and hoarded away. So who is doing the accumulating?
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, take a look at that. As billions of dollars worth of Bitcoin flows out of exchanges, the price of Bitcoin is shooting up. There in white, out of the exchange flows out of exchanges, and yellow there. Conventional wisdom suggests that when big amounts of Bitcoin exit exchanges, the hodlers are storing away their coins in cold storage hoards to be unseen by the public long term. So who is hoarding Bitcoin? Well, aside from sovereign nations like El Salvador, according to Kraken Intelligence, crypto miners are accumulating Bitcoin and contributing to the supply shock that is driving prices up in the BTC market more than 50% month to date. Kraken telling CoinDesk that some miners are using these Bitcoins to further bolster their funding and balance sheets, using Bitcoin as collateral in order to secure fresh funding for further capital investment. Smaller miners taking some profit doesn't necessarily reflect bearishness on their part. Rather, Kraken saying that it's likely helping them buy more mining computers. Regardless of how miners are using their newly minted coins, the fact remains that a large number of them are hoarding their Bitcoins and that they're mining, a practice that has become very lucrative. This is evident from more companies diversifying their businesses into mining even without any previous ties to the sector. And joining us now to discuss Bitcoin and more is Elite Mining CEO Justin Podhola. Hi there, Justin. Thanks for coming on. So is Elite Mining accumulating any Bitcoin?
Yes, we certainly have started to tick up on the hoarding of Bitcoin. I don't really call it hoarding. I like to call it hodling, but ultimately it is definitely the case. We're onboarding a extreme amount of clients that want to do the same thing. So we're partnering with multiple smaller and JV mining companies that are actually specifically their strategy is to hold as literally as much as they can. They realize that Bitcoin only has 21 million and there's only 2 million plus left. So it's becoming more and more evident to us that hoarding, as you say, is a good move.
Accumulating and hodling, if you will. So what are you doing with that Bitcoin? Are you just holding it, or are you using it as collateral to secure other funds?
Yeah, great question. It's definitely collateralization. People want to mine, receive more Bitcoin, keep it on their balance sheet. They want to leverage that to buy more miners, keep it on their balance sheet, and then put more miners on their balance sheet, and then just it cycles over and over again. So more assets of mining gear, more Bitcoin. It really creates a bubble if you're able to do it effectively, to where you can leverage even more, and then thus starts the exponential growth if you're in the right position to do so.
And would you say this is the trend among the whole mining industry right now?
The large majority of it. The smaller miners usually typically have to sell. So if you're in a position where you have a lot of capital, then you're able to be a mainstay in basically accumulating. So all the larger miners, I can name off a bunch of them, but just all the larger miners are typically trying to hold as much as they possibly can, because they realize that the bull is going to probably and likely stay. At the very least, there is a very, very large argument in case to be made that the market is going to continue to trend upwards long term, by all means. So they all realize this, and they want to have as much as they can.
And in what situation would they unravel their holdings and start putting it back on exchanges and selling?
Great question. So in my opinion, in the research that we do here, it's really all about leverage. The market is leveraged pretty heavily right now, more so than it's ever been. So in my opinion, the previous guest just mentioned this, which is spot on. Ultimately, if we're over leveraged and the price drops, then all of a sudden a cascade of liquidation can happen. And for miners, that's actually a bullish case for us to pick up even more Bitcoin via mining, because typically the difficulty follows that price drop. So then you're able to actually gain more net Bitcoin and even hoard even more. So for miners, it's twofold,
In terms of the security, the hash rate's been also going up as well. So that's been pretty impressive, considering, China had their mining crackdown, and that's moved over to the US, Russia, Kazakhstan, among many others. So an update on the hash rate.
Yeah, hash rate is going to not only continue to increase to go up, significantly so, but the U.S. has become a superpower for Bitcoin now because of the exodus. So this what I would say relocation of decentralization is actually healthy for the system in general. It shows Bitcoin's anti-fragility, and at this point, there is so many miners being bought up in the supply chain that there's actually constraints happening on just logistics that are super stressful for the global trading platform. So there's an incredible amount of hash rate that's coming on board. So usually, as a metric we like to use at Elite Mining, is the difficulty will continue to go up, and as it does, typically the price will keep pushing up. So that's why we're still bullish in current times. So
outlook for the end of the year for Bitcoin, as well as in end of 2022?
Oh, goodness. That's a tough one. My crystal ball says 85,000 by end of year. And in 2022, that one is really difficult. I'm going to say there's going to be some kind of drop. But it's times of change. It's not 2017 anymore. The 2022 year is going to be the year of larger corporations all barreling into it very slowly and meticulously. So I think that it's going to be a low floor of somewhere in the range around 30 to 40, and then it's going to just continuously go up long term.
Interesting. Well, we do see a lot of crypto investment coming into the space. Justin, thanks for joining us. That was Elite Mining CEO Justin Podhola. That's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again tomorrow at 3 p.m. Eastern Standard Time. And join us tomorrow morning at 9 a.m. in New York for First Mover. You're watching CoinDesk TV.